Morning, everyone. Morning, trade pros. Morning, YouTube. Hope everyone is doing well. Welcome to the morning market update today. And we do have a lot of things actually to cover today in this update. And we're going to go through all of them. It's going to be pretty extensive, I would say, but I do want to cut it down a little because we do have JPowell coming on the wire. We have JPowell in about 9 minutes, so let's see if we can do this in 9 minutes because I really want to see what's going on. Speaking of JPowell, we have him coming on this morning. He has a speech at 9:10 a.m. Eastern. I suggest everyone watches that, whether it's on Financial Juice, right? They'll have updates, maybe a little delayed. Financial Juice or News Squawk, whatever news service you have, even Twitter is a good news source. And he's going to be probably dropping hints about where we could go with this monetary policy, what the next steps are, inflation measures, right? The tightening process and all that good stuff. So I highly suggest looking at that. Leading into that, talking about Jerome Powell, the Fed, tightening, inflation, all that stuff. We also have Europe, right? There is trouble a brewing in Europe. Europe, the ECB has come to a point in their economic policy, in their monetary policy mainly, where they're going to be looking to likely begin super aggressive phase of that monetary policy today with the largest potential rate hike in the institution's 24-year history. So most economists are expecting that 75 basis point hike, right? 3/4 or 3/4 of a percentage point increase. And that is in lieu of that half a percentage, 50 basis point hike that came in July. So the hike was the first in more than a decade and the first since the pandemic, and now is still very far behind the overall central bank peers, right? We've seen the Fed hike multiple times now, 75 bips, and 75 bips is expected to come out in the September meeting. Realistically, the ECB is still playing catch up, and it won't be necessarily easy with the Eurozone staring down a barrel of severe economic crises. So the common currency is also plunging amid surging inflation, which has hit a new all-time high of 9.1% in August, while the damaging recession is in the works due to the energy crisis. So things are still getting better. Things are not getting better in Russia, I should say, and Russia threatens to cut off all the gas supplies to a collective West ahead of what might be a harsh winter in Europe and retaliate if the G7 imposes a price cap on Russian oil. So at the Jackson Hole, we saw the ECB executive member Isabel Schnabel, I think, acknowledge a trade between taming inflation and maintaining growth. So this was from BlackRock, the investment institute, and yet she stressed a robust control approach to monetary policy, focus on getting inflation down to whatever it costs. So it's very, very, very similar to what's going on in the Fed, right? They're taking measures naturally. It seems like a little late based on the ECB's front. It seems a little late, but they're taking the same measures as the Fed, and that's exactly what we're going to be waiting for, ideally, to see what happens out of Jerome Powell's speech that comes out at 9:10. Ideally, we get some kind of information based on that tightening policy and that data, because remember, throughout the Jackson Hole, he came out super hawkish, and I don't think he changes that tune. It's pretty much set in stone that he's already said all these things, right? Realistically, if we see a reaction, it's to be expected to one end or the other. But talking about household and consumers taking a beat down was one of the main aspects that really stuck with me throughout that Jackson Hole symposium. So many are wondering if the ECB can even play catch up at this point, or if it's caught in a catch-22, right? Raising rates to stave off entrenched inflation only to find energy prices are keeping costs elevated and weighing on the economic output. So in this situation, inflation may not decline, or at least take quite some while to decline, risking a nightmare stagflation scenario. So the ECB will announce the policy decision and growth projections at this morning, pretty much, with President Christine Lagarde's news conference in the late hour of, I believe it's still going on right now. So it's something to watch for as well, leading into Jerome Powell's speech. We also have U.S. Consumers, right? Inflation is changing patterns in the U.S. with some 40% of consumers expecting to start their holiday shopping by the end of October, according to YouGov survey commissioned by the bankrate.com. So the distribution of timing of for when consumers predict to begin shopping ranges from 11% that already started at the end of August to about 12% that say they're going to wait until December for their gift buying. So this is insane, right? The expectations for inflation, even from the consumer sense, seems to be increasing as well. The survey also carried out between August 17th and 19th, sampling a small amount, but like about 2,500 adults. So overall, 40% of consumers say that inflation will change the way that they shop, with the biggest proportion, 45%, being the lowest income bracket under 50K in annual household earnings. So 41% of the shoppers with annual income between 50 and $80,000 annually say they will change their way that they shop based on inflation. Also, more than 4 out of 5, about 84% of holiday shoppers say that they'll also use money saving tactics this year, including coupons, sales, and discounts, about 41%. Buying fewer items, 40% said this. Starting shopping earlier, 27% said this. Buying cheaper brands, 21% this. And using credit card rewards to offset costs. So shopping at stores where they have loyalty accounts or store specific cards, making gifts or crafts, and obtaining secondhand items. So a lot of the consumption is starting to change, right? Because we've also seen the individual consumer debt levels have increased drastically, and people are very aware of that. So even with inflation increasing aggressively, people are starting to actually pull it back. It is a little late at this point, but there are expectations from the consumer end that we won't see a typical end very nearby on these inflation numbers, right? People are starting to be more cautious. And when those consumer numbers start dropping, right, of course, it's not a vast majority of them. You're seeing general household incomes not in the higher or mid tier end. But once those start trickling down, you're going to see that affect GDP naturally, and then you have talks where we circle back into recessionary talks. So payment methods as well. Some 21% will pay for purchases with a credit card over time, and 10% plan to use buy now, pay later options. So again, very interesting. Those debt levels continue to increase based on this survey. So while the latter services are interest-free loans, they can eventually be turned into late fees, deferred interest, or other penalties. Overall, the most popular payment method throughout holiday shopping is about 54% credit cards, with 38% planning to pay in full and 21% doing multiple billing cycles. 50% will use debit cards, 43 cash, 7% checks. So again, smaller sample size, but you're getting a somewhat of an indication of what the consumer is thinking for the next 3 months, the next quarter ahead. And speaking of consumers, speaking of consumption, Apple event yesterday unveiled updates to its iPhone, AirPods, and Apple Watch product lines. And we saw a new Apple Watch Series 8, a new iPhone 14 with satellite connectivity. And Chief Executive Tim Cook kicked off the event, noting that all three products are essentially in our lives and work seamlessly together. This type of integration is something only Apple can do, and we're going to make these products and experiences even better in this pre-recorded video. Now, naturally, the prices have gone up for these devices. We saw that ticker symbol GSAT, which is Global Star Satellite, popped aggressively. There was a lot of volatility around that based on the satellite proponent in some of these devices. We also seen that they're moving into an eSIM instead of a physical SIM card, which is fairly interesting. But the question realistically is, right, based on all this inflation, based on all this consumption data, will people necessarily buy these new products? Realistically, probably yes, but we'll see when those numbers and those revenue numbers come out in the following months, especially around that holiday season. So, have there been that many changes? Not necessarily, right? Are you going to buy the new iPhone? I don't know. Drop a comment down below. Do you want that new iWatch? Let's see. And realistically, right, Apple is one of the biggest constituents in the market and can typically move the market, right? We saw a massive rally, about 40% off the lows on Apple, which dictated a decent surge in the overall market on the last rally, bear market rally that we saw. So we'll see how the consumption goes down in these Apple products and how that it'll affect. Realistically, we'll see that at the end of the year when we see those the next quarter's results and the revenue boost from these new products, but they have increased in price, and that's something to consider. So coming up into JPowell, right? He's starting to talk probably soon. He's probably a bit late. It's not going to be exactly 9:10. We see that this morning we had jobless claims, right? They moved the market. We're now dropping fairly aggressively from that key level that I noted yesterday. We had that 3988 to 3990 area, and now we're pulling back down. Watch the 3975, right? As long as we remain below that area, there's going to be some targets to the downside on the futures. We also have the 3965 below, 3955. And when we start dropping under 3947, I think that we accept into a distribution block to the downside where prices are going to want to push lower. Now, a lot of this is going to be dependent on what we hear from JPowell, right? Keep a very, very close ear out on the monetary policy talks, right? Where the potential tightening may go, so on and so forth. So keep those levels in mind on the futures, and we'll see what happens, right? Let's see what Jerome Powell has to say. Now, some of you say don't want those Apple devices, right? This is the same crap over and over again, realistically, in my opinion. I still have an iPhone from like, this thing is so damaged. It's like broken and stuff. You can see like screen cracks and whatnot, but it's from like, I don't know, like 3, 4 years ago, and it works perfectly fine. So until I can't see the screen, I feel like I'm not going to get a new one. So keep that in mind. That's my opinion, at least. If you guys want that new iPhone, by all means, go for it. It's going to pump that stock price and more people to buy it. We'll see if those consumption numbers go up. So can we all band together to pull Apple up based on just buying AirPods, iPhones, and iWatches? I don't know. We'll see. But what another interesting fact is that those AirPods, they have more revenue than Tesla. So who knows? We'll see how that shapes up. And I hope to see you guys in our trading room. We'll start it off in the futures and options. We're going to open those rooms up, and I hope to see you guys there. Let's see what Jerome Powell says. Will we see a massive downshift if he continues with this hawkish tone? Let me know. What do you think, right? We have next week, we have the CPI data. The week after, we have the FOMC expected rate hikes, and we'll do our classic FOMC Fed futures, right? Countdown to the FOMC. We'll see what the expected probability of a 75 bip hike is. Yesterday was 84%. Today it's 84% as of now. We'll see if Jerome Powell manages to sway that probability. And I hope to see you guys tomorrow. Wrap up the week Friday, and we'll see you guys in our trading room. So let's open those up. Have a great trading day. Stay diligent. Let's see what Daddy Powell says, and take care.